Should you invest in the Grid ETF? Watch before you decide. Hey everyone, and welcome back to Chat ETF. Today, we're diving into the world of clean energy and smart grids with the Grid ETF. This is your one-stop shop for understanding future-proof technologies powering our world. Curious about renewable energy, grid modernization, and potential investment opportunities? We'll break down everything you need to know about the Grid ETF, from what it is and how it works to its potential benefits and risks. So, buckle up and get ready to unleash the power of smart grids with Chat ETF. Let's chat. Question 1. What is the Grid ETF? The Grid ETF, which stands for First Trust Nasdaq Clean Edge Smart Grid Infrastructure Index Fund, is an exchange-traded fund, ETF, that focuses on the global smart grid and electrical energy infrastructure sector. Here's a breakdown of what that means here. ETF. It's a type of investment vehicle that trades like a stock, but holds a basket of underlying assets, such as stocks or bonds. Global. The ETF invests in companies from around the world. Smart grid and electrical energy infrastructure. The ETF focuses on companies involved in developing, owning, and operating the infrastructure that supports the delivery of electricity, including the smart grid technologies. These technologies aim to modernize the electricity grid by making it more efficient, reliable, and resilient. This can involve things like smart meters, advanced grid management systems, and distributed generation. Electrical energy infrastructure. This includes companies that build, maintain, and operate the physical infrastructure used to transmit and distribute electricity, such as power lines, transformers, and substations. Overall, the Grid ETF offers investors a way to gain exposure to the growing global market for smart grid and electrical energy infrastructure, which is expected to benefit from the increasing demand for clean energy and the need to upgrade aging infrastructure. Question 2. What is the investment objective of Grid ETF? The investment objective of the Grid ETF is to track the performance of the Nasdaq OMX Clean Edge Smart Grid Infrastructure Index, before fees and expenses. This essentially means the ETF aims to deliver returns that closely mirror the returns of the underlying index. The index itself tracks the performance of companies involved in the global smart grid and electrical energy infrastructure sector. Therefore, by investing in the Grid ETF, you're essentially investing in a basket of companies that are expected to benefit from the growth of this sector. It's important to remember that the ETF itself doesn't guarantee any specific investment outcome, and its performance will be directly tied to the performance of the underlying companies and the index it tracks. Question 3. What is the significance of smart grid technology? Smart grid technology holds significant potential for the future of electricity, offering a multitude of advantages over traditional grids. Here are some key points highlighting its significance. Enhanced efficiency. Smart grids enable two-way communication between utilities and consumers. This allows for real-time monitoring of energy usage. This empowers consumers to identify and adjust their consumption patterns to optimize efficiency and potentially reduce costs, especially during peak demand periods. Optimizing energy delivery. Utilities can dynamically adjust power distribution based on real-time demand, minimizing energy losses during transmission and distribution. Increased reliability and resilience. Smart grids offer improved grid monitoring and self-healing capabilities. This allows for faster identification and isolation of outages, minimizing their impact and facilitating quicker restoration. Integration of renewable energy sources. Smart grids can accommodate the fluctuating nature of renewable energy sources like solar and wind, enabling a smoother integration into the overall energy mix. Environmental benefits. By promoting efficiency and enabling the integration of renewables, smart grids can contribute to reduced greenhouse gas emissions, lower energy consumption, and a shift towards cleaner energy sources lead to a smaller environmental footprint. More sustainable energy practices. Smart grids pave the way for a more sustainable and environmentally friendly approach to electricity generation and distribution. Economic advantages. Smart grids can potentially lead to lower energy costs for consumers, improved efficiency, and potential for demand-side management can translate to cost savings for consumers. Reduced infrastructure investment needs. Optimized grid management can potentially minimize the need for costly new infrastructure investments. Overall, the significance of smart grid technology lies in its potential to revolutionize the way we generate, distribute, and consume electricity. It offers a path towards a more efficient, reliable, resilient, sustainable, and cost-effective electricity grid for the future. Question 4. What are the key components of the Grid ETF portfolio? The Grid ETF portfolio is comprised of companies involved in various segments of the global smart grid and electrical energy infrastructure sector. Here's a breakdown of some key components. 1. Smart grid technology companies. These companies develop, manufacture, and sell technologies that enable smart grid functionalities. This can include smart meters. These devices collect real-time energy usage data from consumers. Advanced grid management systems. These software platforms analyze energy usage data and optimize grid operations. Distributed generation technologies. These technologies generate electricity at the point of use, such as rooftop solar panels and combined heat and power (CHP) systems. 2. Electrical equipment companies. These companies design, manufacture, and distribute equipment used in the transmission and distribution of electricity, such as power transformers. These transformers regulate voltage levels for efficient transmission and distribution. Circuit breakers. These devices protect electrical circuits from damage caused by overloading or short circuits. Switchgear. This equipment isolates, protects, and controls electrical circuits. 3. Engineering and construction companies. These companies provide engineering and construction services for the development and maintenance of electrical grid infrastructure, including transmission line construction, building and maintaining high-voltage power lines that transmit electricity over long distances. Substation construction, building and maintaining facilities that convert and distribute electricity from the transmission grid to local distribution networks. Smart grid infrastructure installation, installing and integrating smart grid technologies into existing infrastructure. 4. Utilities. Some utilities may also be included in the portfolio, particularly those actively investing in smart grid technologies and infrastructure upgrades. Question 5. How does the Grid ETF select its constituents? The Grid ETF doesn't directly select its constituents. Instead, it tracks the Nasdaq OMX Clean Edge Smart Grid Infrastructure Index, which is responsible for selecting and weighting the underlying holdings. Here's a breakdown of the selection process for the index. 1. Industry classification. The index starts by identifying companies that are classified within relevant global industry classification standard, GICS, sectors related to smart grid and electrical energy infrastructure. 2. Financial screens. The index then applies various financial screens to the identified companies based on factors like market capitalization. Only companies above a certain minimum market capitalization are considered. Liquidity. The index prioritizes companies with sufficient trading volume to ensure adequate liquidity for the ETF. Profitability. The index may consider profitability metrics to ensure the financial viability of the included companies. 3. Weighting methodology. Once the companies pass the initial screens, they are weighted within the index based on a proprietary methodology developed by Clean Edge, the index provider. This methodology considers factors like revenue exposure to the smart grid and electrical energy infrastructure sector. Companies with a higher percentage of revenue derived from this sector receive a higher weighting. Market capitalization. Larger companies generally have a higher weighting within the index. Investment in research and development. R&D companies actively investing in R&D related to smart grid technologies may receive a higher weighting to reflect their future growth potential. Question 6. What are the potential benefits of investing in the Grid ETF? Investing in the Grid ETF can offer several potential benefits, but it's crucial to remember that all investments involve inherent risks, and past performance is not necessarily indicative of future results. Here's a breakdown of some potential advantages and considerations. Potential benefits. Exposure to a growing market. The smart grid and electrical energy infrastructure sector is expected to witness significant growth in the coming years, driven by factors like increasing demand for clean energy. The global shift towards renewable energy sources necessitates grid modernization to accommodate their integration. Aging infrastructure. Upgrading and replacing aging grid infrastructure is essential to ensure reliability and efficiency. Government support. Many governments are implementing policies and incentives to encourage investment in smart grid technologies. By investing in the Grid ETF, you gain exposure to companies positioned to benefit from this potential growth, offering the possibility of capital appreciation in your investment. Diversification. The Grid ETF provides diversification across various companies within the smart grid and electrical energy infrastructure sector. This can help mitigate risk compared to investing in individual companies, as the performance of the ETF won't solely depend on the success of any single company. Socially responsible investment, SRI. For some investors, the focus on clean energy and infrastructure upgrades associated with the Grid ETF aligns with their socially responsible investment goals. Considerations. Market volatility. The ETF is still subject to market volatility, meaning its price can fluctuate significantly due to various factors impacting the broader market or the specific sector it tracks. Technological uncertainty. The smart grid sector is still evolving, and the specific technologies that will ultimately succeed are not guaranteed. This technological uncertainty can introduce an element of risk. Fees and expenses. Like any ETF, the Grid ETF has associated fees and expenses, which can eat into your returns. It's important to factor in these costs when evaluating your investment decision. Question 7. What are the risks associated with investing in the Grid ETF? Investing in the Grid ETF, like any investment, carries inherent risks. Here's a breakdown of some key potential risks to consider. Market risks. Overall market volatility. The Grid ETF is subject to broader market fluctuations. If the stock market experiences a downturn, the ETF's price is likely to decline as well, even if the companies within the smart grid and electrical energy infrastructure sector are performing well. Sector-specific risk. The ETF is concentrated within a specific sector, increasing its vulnerability to downturns affecting the smart grid and electrical energy infrastructure industry. If this sector underperforms the broader market, the ETF's value could be significantly impacted. Investment risks. Technological uncertainty. The smart grid sector is still evolving, and the specific technologies that will ultimately succeed are not guaranteed. Companies within the ETF could face challenges if their chosen technologies become obsolete or fail to gain widespread adoption. Regulatory risk. The development and implementation of smart grid technologies are subject to government regulations. Changes in these regulations, including potential delays or approvals, could hinder the growth of the sector and impact the ETF's performance. Currency risk. If the ETF invests in companies located outside the US, their performance can be affected by fluctuations in foreign exchange rates.